Hey everybody, it's Paul here from Better Call Paul. It's that time of the month again. We are going to go over my entire portfolio. You can see how I am earning just over $11,000 a month in passive income from a portfolio which is now at an all-time high of around $445,000. So, guys, this video is usually just about a half hour long, so I'm not going to waste too much time. We're going to get right into it. First thing I want to do is just show you quickly my Wealthsimple front page so you can see that covered call ETFs do appreciate in value. These portfolios are not deteriorating away to nothing. And for me, this is definitely an all-time high. Keep in mind, this is just my Wealthsimple portfolio. If you watched my video yesterday, I showcased my RBC TFSA, which is also at all-time highs, just over $61,000. And then the balance of my portfolio is in my RBC RSP, which is about $6,800. So all three of them combined make the 445,000. So quickly, we'll just look at my Wealthsimple portfolio. So here you can see, guys, currently at 378,000. I'm up 107%, which is the equivalent of $195,000. So, guys, I'm going to take you through a couple of spreadsheets so you can see some of my some of the different analytics of my portfolio in case you have questions about it. Okay, this is the one I like to start with. It's my portfolio makeup. So this was as of October 27th, which was yesterday. I put this all together. So my Wealthsimple TFSA is $180,038. In my RBC TFSA, there was $61,734, which is a total of $241,772 in my tax-free savings account, which for any American followers, that's an account we have in Canada. Another account we have is the RRSP. I currently have $170,000, $170,393 in my Wealthsimple, and another $68.61 in my RBC account. So that totals $177,254. I do have a non-registered account that I plan on moving as much as I can into my tax-free savings account in 2026, but currently sitting at $26,531. And then I have a checking account that is currently at $1316. So you can see in August, my account was my total portfolio at the end of August was $398,840,000. Yesterday it was sitting at $446,873. So that's a 12% increase month over month. All right. So if you go back to 2023, my portfolio balance was $275,585 at the end of the year. And then in 2024, it jumped to $371,432, and now currently sitting at $446,873. So you can see my portfolio balance is growing, even though I'm an income investor and I'm actually withdrawing money from my portfolio. And if you look on this far side here, you can see that in 2023, my distributions was only just over 35,000. And then last year jumped up to just over 65,000. And so far this year, I have broken my goal of reaching $80,000, and I'm currently just over $90,000. So very happy with that. So now we are going to take a look at my dividend tracker just to see where I'm at compared to previous years. So you can see here that currently in October of 2025, I'm at $10,837. Now, if you go down, you can see the progression, right? So in 2020, I was at 354, then just over 1,400, then 2,200, 3,500, 6,600, and now 10,837, which is 62% higher than last year. So in 1 year, my monthly income's grown by 62% already, which I think is phenomenal. And it's going to go higher. There's still a week left or a couple days left in this month. So why I say that I'm going to make over $11,000. This is my daily snowball portfolio. Um, these distributions have already been announced, so I know how much I'm going to make. I haven't gotten the announcement yet for YBTC, but I have these other ones. And as you can see, Alti's down a little bit, but not too much. YMAX is up quite a bit, and YMAG is doing well. So that totals 398. That's US. So converted to Canadian will be 549, which is going to put me well over 11,000. I think I might actually get close to 12,000, but we'll see. So in terms of monthly income, this is going to be by far the best month I've ever had. I'm already sitting at almost 11,000. I still have AIPI coming on October 30th, which is 200 shares worth, is going to be over 300, I think, Canadian, plus all the distributions I just showed you. And on top of that, there's going to be all of the yield max and Round Hill distributions, Defiance distributions coming on Friday. So like I said, this potentially could be my best month ever, hitting almost $12,000 in distributions. All right, guys. So this month, I decided to make some moves. The first one being selling my 1,000 shares of Bank. I really like Bank, but I felt that Canny offered more diversification. So as I was, okay, I sold Bank and I bought Canny. I feel that Canny offers more diversification, and I call this organic growth. So I was able to increase my income by 507 per year, or $42 monthly. I also decided to sell 50 shares of YMAG. I don't like it when YMAG pays less than 10 cents a month. So that's where I've been kind of like selling 50 shares at a time. And then I bought some more Alti and some YBTC. Again, I was able to increase my distributions, my annual income, by $197 or $16 per month. Then I decided to sell some more CNYE. It was up. So I sold that. I bought MSTE, 50 shares and some Canny. Now this was accurate at the time, but as we all know, they did reduce the distribution for MSTE. So this is probably not going to be $132 anymore. Same with PLTE. I sold 50 shares because I was up a lot and MST was down. So I bought 50 MSTE and then another 31 Canny. Sold some more. Well, sorry, I sold PLTW. Had 24 shares. I was up about 70%. Decided to swap it into MSTW by 34 shares. Unfortunately, since I did this, the distribution for MSTW has come down quite a bit, and PLTW has stayed up. So I might have to look at purchasing some more PLTW for my portfolio. I did decide to sell out of Phoebe from YieldMax. Completely got rid of my position and put all the money into blocks to work on my daily snowball portfolio. But I am looking to reduce the number of YieldMax positions I have. So that's one of the reasons why I did that. You can see here on the side, I also, with distributions, purchased some RDDY from Harvest, some more Canny from Evolve. I got some S-Day from Hamilton. I decided to start a position in RDTE again. I added to my WPay. I added to my QQQY. I added to my TDAC position, YBTC, MSTW, and blocks. This is all part of my daily snowball portfolio. All right, before we look at all of the positions in my portfolio, I created another document last month to show you one of the reasons why I have so many positions, or I don't feel that I have that many positions. So I want to explain it to you in a certain way based on providers versus actual ETF positions. And maybe this will make sense, maybe it won't. So as you can see here, I have I have ETFs from 9 different providers, right? So Harvest being the largest, and you can see the ETFs that I have from Harvest, and then Yield Max, Purpose, Evolve, Global X, Hamilton, Tap Alpha, Roundhill, Defiance, Rexfang, and 9 Point. The way that I'm considering it is this: if I'm willing to buy one ETF from Harvest or Hamilton or from Evolve or Tap Alpha, then chances are the strategy that they're using on that one covered call ETF is going to be the same throughout their suite of covered call ETFs. So once I decide that I like the way a certain fund manager is managing ETFs, then why wouldn't I buy more than one, right? So I don't look at it as I'm having 40 or 50 positions. I'm looking at it as I have 9 or 10 fund managers. And then regardless of how many positions I have within that fund manager group, it doesn't really matter to me because I'm getting the same strategy out of that fund manager for all of those positions, right? Whereas you've seen, for example, a lot of share price deterioration from Yield Max. On the other hand, Tap Alpha, both of their ETFs have been going up. So you get consistency amongst the group. So, having a lot of positions just means more time managing them in terms of tracking dividends and other things like that. So that's why I do like to sort of eliminate a few and add to ones that I prefer. All right, so let's take a look at my portfolio as it stands now with the changes that I've made. All right, so here it is. I'm still using the template that Adriano and Erica have on their website for free. I put the ETFs based on the fund managers to try to group it together, make it a little bit easier. So the first one is HHIS. And if you want, you can, stop the video and I guess take a closer look at this. I don't know if you want me to read the whole thing out to you, but HHIS from Harvest has 15 US stocks with covered calls. This is my largest position by far. I have 4,700 shares. They did increase the distribution, so that's fantastic. And it's going to pay me $12.24 per month, which is almost $15,000 a year. New position, I always put them in yellow. So new position is HHIC, has 10 Canadian stocks with covered calls plus leverage. So the reason why I bought HHIC was to sort of balance out all of my US tech stocks with some Canadian companies, so that when the tech market maybe it has a correction, and then other stocks, other companies will benefit from the correction because people will move their money into safer opportunities. So that's a very small position. I only have 60 shares so far. My third largest position, but is MSTE from Harvest as well. Currently have 3,000 shares. I'm debating on whether I should buy more or not. We all know right now that this ETF is share price is down, and they also reduced the distribution. And even though they reduced the distribution by 10 cents per month, it's still my largest payer. It was paying me, I believe, $1,500 a month, and now it's still paying me $13.50. I also have NVHE, so these are single, just like MST. These are single stock ETFs. So I have NVHE, which is NVIDIA. I have CNYE, which is Coin. Tesla, which is Tesla. LLHE, PLTE, and SHOP. And the new one that I have is RDDY, which is Reddit, that just came out with their recent launch. So you can see that I have fairly large positions in NVHE. It's 1,675 shares. I have 1,075 of CNYE, 1,875 of Tesla, 500 of LLHE. PLTE, I did sell some shares to realize some gains. SHOP, I'm waiting for it to dip. I bought it and it's gone up about 10% since I bought it. RDDY, I have 100 shares to start. I still have Happy Tea, which is U.S. Treasury bonds, and it's actually not doing too badly. And you can see that my yield on cost is 19%. So I think I might add a little bit to it, but I'm not getting rid of it yet. I have the 9-point Shopify, which is SHHI. I bought an equal amount to the Harvest one, put $500 in each. I still have a fairly large position in ENCL, even though I did sell some shares last month. I have 1,250 shares at an average cost of $19.44. I ended up selling some shares around $19.44, I think maybe just above, and now it's almost $1 back down $1 to 8 in the 1840s. So I'm probably going to end up adding some more to this come November. I'll drip it again. I still have 2,200 shares of Utes, and I think maybe this is a position I should actually add some to, because like I said, when the tech drops, I think things like utilities and banks will go up. I have started a position in both Biggie and Canny from Evolve. So Biggie, I have 694 shares, and Canny, I have 450 shares. Biggie is pretty impressive with a 28% yield on cost, and Canny is pretty good as well at 20%. I still have my 1,000 shares of HYLD. They increased their dividend as well, and I would like to buy more if it drops below my average cost. I started collecting Q Day and S Day from Hamilton, and I would like to add C Day as well. I have 210 shares of Q Day, 125 of S Day. I like to buy them, if possible, below $25. I still have 1,600 shares of ETH, so that gives me some exposure to Ethereum. And this is actually I believe this is currently, this is my third, YTSL is my third largest position, but this is book cost. So this is based on 1894. It's currently trading about $27. So this is my largest position at the moment. Third largest position, or second largest position. All right, so that's all the Canadian ones I have. Then US listed, mostly in my RSP, but I do hold some as well in my TFSA. Not a lot, but I have some still. So I have 200 shares of AIPI. I decided to sell out of FEPI and just move the money into here. The yield is, for myself, is almost 29%. I still hold AMZI, Coney, Misty, NVIDIA, and Tesla from YieldMax. Honestly, if I could find something better that pays more and is more reliable, I will consider selling some of these. Just to minimize risk. I think in the next correction, these will drop and possibly not recover. I still have 200 shares of YMAG, and it's done really well the last 3 weeks. It's paid, I believe, close to 20 cents, and then this week it's about 13 cents. YMAX, I still have 1,000 shares. I'm keeping it at 1,000 shares. I'm just going to let YMAX ride. Alti, I have 1,600 shares. Share price is down. They finally dropped the distribution below 9 cents this week, but I will consider buying more shares. I set my limit at 2,000, so I could buy another 400. If there's nothing else to buy on a particular week, I might pick up some shares here and there. Now here's WPay is one of my newer positions that I'm using for my daily snowball portfolio. And I'm currently at 27, so I buy this every week. MSTW, same thing. I'm buying that weekly. YBTC, this is my another new position that I have. Gives me some Bitcoin exposure. QDTE I've had for a long time. I'm just keeping that. It pays weekly. I haven't added to it. I'm building up my RDTE position instead. I just added that back into my portfolio. So this is giving me some exposure to the Russell 2000 index. From Defiance, I still have QQQT and SPY-T. I think these are both doing great. They're both close to, well, they target 20%. So they're both distributing, for me anyways, my yield on cost is around 20%. I did actually add some shares to SPY-T a while ago, so I'm up to 235, whereas with QQQT, I only have 200. So I will buy more of these when the opportunity presents itself. QQQY from Defiance, this one's doing really well now. I know in the beginning it dropped its share price a lot, but it's really stabilized, and the distribution is pretty close to 20 cents a week now, which is great. Same with WDTE. I have 92 shares. Once I get QQQY up to 100 shares, I'll probably start building the WDTE position, or at least get it up to 100 shares. Now, here's one of my favorites, US listed from Tap Alpha, is T-SPY and TDAC. So I have my 500 shares of T-SPY, and I have 25 shares of TDAC. So I need to build this up a lot. I want to get up to 500 as well. And then last but not least is also a new position of mine, which is Blocks. I've managed to build it up pretty quickly to 80 shares, but I keep adding to this as well on a weekly basis. So you can see right now, my average dividend yield is 29.41%. Annual income will be $135,000. Now that's based on this amount here moving forward, but I wasn't making that at the beginning of 2025. My monthly income is $11,278. So I'm hoping to beat that this month. We'll see. Currently, my book cost is $460,000. Now the current portfolio value, this is wrong, should be $445,000. Still leaves me negative 3%, but just keep in mind that I didn't actually put $460,000 into this portfolio. That is reinvesting distributions. All right, so I'm going to just take you back to my my spreadsheet and see. I think I missed one page. Future plans. Okay, so I still plan on withdrawing 100% of the distributions I make from my non-registered account. In my TFSA US account, I plan on continuing to buy RDTE, and I'm still looking to sell some of these if the opportunity presents itself to swap them out for something better. In my TFSA Canadian account, I'm hoping to buy more canny. I'd like to see it dip a little bit. Everything's so expensive right now. I'm going to put ENCL back on drip, and I would like to buy the 2 Shopify ETFs if they're on sale. My Wealthsimple RSP US account, I'm doing my daily snowball portfolio. So right now that consists of buying WPay, YBTC, QQQY, Blocks, and MSTW. And I'll be doing a video update on that portfolio probably tomorrow. In my Wealthsimple RSP Canadian account, I want to add C-Day from Hamilton and then buy S-Day and Q-Day on dips. Like I said, I kind of like to buy them below $25 whenever possible. In my RBC TFSA account, I will continue withdrawing $1,000 a month. And I just added HHIC this month and Biggie last month, so I'll be adding to those positions. And then my RBC RSP account, I'm still trying to move it to Wealthsimple. I went in and met with a guy. He claimed that RBC has nothing to do with it. It basically said it was Wealthsimple's fault that the funds didn't get moved to Wealthsimple. So I'm still trying to figure out how to move that extra $6,800 over to my Wealthsimple RSP account. Well, everybody, so that's my portfolio right now as it stands. I'm extremely happy with it. I know there's been a lot of talk on Blossom about growth versus covered call ETFs. I'm not really sure why, the growth investors are so upset with income investors. The fact that I've been able to increase my income, by 62% already from last October to this October, and I'm still going to get probably close to another $1,000 in dividends this month. So that number is going to go higher. I don't know why they feel that that is a failing, investment strategy. I do realize that right now we're at all-time highs. My portfolio value's up, distributions are up, and during a bear market or a recession, they're going to go down, right? I realize that, but it's also a buying opportunity, right? It's a chance for us to load up on all the ETFs that we like, buy more, and when the market corrects itself and goes back up again, then we'll be in a good position. So I'm not really worried about it. I mean, everybody loves a bull market, but it seems like everybody's panicking that the market's going to crash. They're trying to figure out when. I wish I knew when the market was going to crash. I would sell a few of my positions and get ready for it, but nobody has a crystal ball, so I'm not going to bother worrying about trying to do that. Um, Other than that, guys, that's my portfolio reveal for this month. I'm very happy with it. Please, don't take this as financial advice. You guys know that this is my journey. I'm retired now and living off my portfolio. So I would encourage you to make sure you do your due diligence. Investigate, any funds you want to purchase. Make sure you understand how they work, what the pros are, what the cons are, and make an educated decision for yourself, like what suits your needs best. Right? Don't look at me and other, YouTubers who are using covered call ETFs and other income investing products or strategies and just copy us without knowing why they work for us, how they work, and how they could work for you, or maybe they're not the right investment tool for you. Um, Anyways, guys, that's it for today. So until tomorrow, bye for now.